It's been very popular lately. Why not get somebody else to help you qualify for your mortgage or even pay your mortgage for you? A lot of people are getting houses with basement apartments or even duplex up to triplexes.
Hey everyone, it's Lawrence Mack here from Remax Realtron, here with Erick Mayen from Erick Mayen Mortgages. Today to talk about first-time home buyers and different options that you have that aren't necessarily standard. Thanks for joining me here today, Erick.
Happy to be here.
Excellent. So let's get started. The first thing that could help would be the RSP contribution that increased recently last year. Want to quickly talk about that?
Yeah, back in spring of last year, the Liberal government was so gracious to increase the amount that you can withdraw from your RSPs up to $35,000. It's a really great program. Essentially, what you have to consider is that you are borrowing this money from your RSPs. So you can take up to $35,000 and essentially you pay it back a year after you finish closing your home, and you pay it back in 15 equal payments. And so essentially what you would do is you would make an RSP contribution, and when tax time comes, you let whoever's doing your taxes, your accountant, or if you're doing it yourself, there's a specific box that you would be specifying that this is a payback towards your first-time home buyers program.
Right, and that has increased up to $35,000, and so this is just a good method to bring more money to the table when you're trying to buy a property.
Yeah.
Number two, the First-Time Home Buyers Incentive Program, also introduced in 2019. I want to give a quick idea about how that would help.
Yeah, it's a really great program. It increases your buying power. Government's going to come in and help put some money towards your down payment, up to 5% on an existing property or 10% on new builds. It helps buyers being able to either qualify for the house that they would want or also give them the extra little edge to get them into a house that's a little tiny bit nicer.
Yeah, and we did another video on that as well, which you can take a look. I'll link it over in the comments. Number three, so if you don't have the down payment, whether it's 5%, 20%, whatever it is, sometimes it helps if you have someone who's trusted, like a parent, that can maybe lend you the money or give you the money, that kind of thing. That's also another great option. Can you talk about that option?
Yeah, there's lots of lenders that do take gifts as part of the down payment. One thing that you have to consider is that whoever's providing you this gift does have to show a track record for these funds. So they need to be able to show for the last 90 days where these funds were, whether they were in a bank account or whether in an investment account. And then there would also be an actual gift letter that most lenders would have their own specific lender-specific letter that you would fill out.
And the main reason for that, of course, is just to make sure that the money came from legitimate sources, and so the lenders want to make sure that the money is okay.
Yeah, they're just crossing their T's and dotting their I's.
Yeah. Number four, a lot of people have asked about whether they can either get a duplex and rent out the other side, or maybe have a basement and rent out that, and whether or not that helps in terms of the financing or being able to afford a place.
Yeah.
Can you talk about that, those options?
Yeah, it's been very popular lately. Why not get somebody else to help you qualify for your mortgage or even pay your mortgage for you? A lot of people are getting houses with basement apartments or even duplex up to triplexes, where what happened is the lender, when you do the appraisal, they would assess for fair market value, and on the A side, they typically are looking at 50% of the amount that they would be able to charge for rent and adding that to your income. And on the B side, there are some lenders that will do up to 80%, and on the private side, there are even some lenders that will consider 100% of the amount of rent that you'd be able to collect.
So that's excellent option if you're trying to rent it. There's another thing, so the difference between renting and boarding is that renting, you need a separate entrance, separate kitchen and bathroom, so that you're not really sharing it with the person who's living there. So the other option would be boarders, and so a boarder is somebody who, for instance, you have like a room and you're renting the room out to a student for say $500 a month or something. And can lenders take that into consideration when we're trying to figure out the ratios?
So there are some lenders out there that will do what's called contributory income. And what they'll look at is essentially if they are renting like $500 to $1,000 for a room, and you let the lender know and what they will do is they will qualify that specific person on their own merits. They won't be on the actual property, but they want to make sure that they have good credit and that they're able to service the payment based on their income and everything, but they won't actually be on the actual property, on the actual mortgage or property.
All right, so the idea of maybe renting out a room or two to a student or to somebody like that could help.
Yes.
But it depends on the type of lender.
It's dealt with on a case-by-case basis, but it is something that is definitely considered.
And also just another option if for some reason you just can't qualify on a regular basis, 20% down payment with your numbers that you have. Number 6 of 5% down payment instead of 20% down payment. You want to talk about that?
Yeah, it's something that I feel very strongly about. A lot of people ask me whether they should wait until they've been able to accumulate the 20% down payment to essentially avoid paying the default insurance premium. That's by CMHC or Genworth or through Canada Guarantee. And I tell them, no, not at all. What I would recommend is as soon as you're able to accumulate the 5%, get into the market. Because what happens essentially is the default premium is amortized over the 25 years. And when you take into consideration how much you're actually paying, it's about an extra $25 to $40 a month extra that you're paying that gets you into your property sooner and lets you take advantage of the market and and the actual appreciation of the home. And if you're seeing appreciation values of anywhere 5 to 8%, it's a small price to pay to get you into your actual property sooner.
Especially considering the primary residence tax exemption. So really now that you're owning your own place and it's increasing, you make a lot more money than if you were to just rent, for instance, or wait another year.
Exactly.
So that's another great option, putting 5% down payment. Number 7, some issues I've run into would be people who are trying to buy a house, but a lot of their income is either cash and not really declared, depending on the type of business that they're in. And I guess the question is that an issue, and how can you overcome the issue?
Yeah, well, there are some definitely some lenders on the B side that can help with that. They'll look at things like 6 months of bank statements, and they'll annualize that. And as long as that makes sense for the industry that you're in, but one thing you have to consider is that it is on the B side. If you did want to go onto the A side of lending, where the rates are a little bit better, one thing you have to consider is that your tax write-offs and how that affects your buying power. Because essentially what most lenders are looking at, they're looking at your line 150 and the average over the last 2 years. And so they won't look at your gross, unfortunately, and a lot of lenders on the A side are not doing add backs anymore. And so essentially what that means is you're just looking at your after deductions income, where I understand writing off and saving on taxes, but it is a double-edged sword when it comes to the time when you're looking to buy.
Okay.
So essentially what the advice I give is bite the bullet for 2 years straight. And declare the higher amounts so that when it comes time, and time yourself so that you're ready to buy by the time your next assessment comes out, and so that they can see that you have a proven track record and can actually report the income that you declare.
Can't have your cake and eat it too. Exactly. You're going to have to sort of pick one direction, and if that's what you want to do, get a nice house or something like that.
But there are options. Like I said, if you did want to declare less, like it was mentioned before, the 6 months of deposits that they'll look at. But like I said, with that comes rates that are a little bit higher as well.
Yep, so there's going to be a trade-off. And lastly, number 8 here, joint ownership, which is becoming more and more popular nowadays because of affordability. Can you talk about those options?
Yeah, so if you do have a very trusted friend or a family member, like a parent or a cousin that you're looking to buy a property with, it is entirely possible. One thing that you have to consider as well, though, is that if you currently own a property or you have any kind of large debt, like a car loan, and you have a partner that you or a spouse that you took out that actual mortgage on, you have to consider what the other people are bringing to the table. Because if you do have a large debt, then if you're coming to the new mortgage without that partner, then what happens essentially is that full burden of that mortgage payment or that debt payment falls on that person specifically. So you do want to be able to make sure that you do find somebody that contributes something to the application and not something that's going to bring the application.
Bring down and burden you so that you have to call for more, in which case you might as well just buy it yourself. Exactly. Right? You want to make sure everyone's contributing to that. So anyways, that's 8 options. Hopefully helps you a lot. If you have any questions about financing or mortgages, talk to Erick Mayen anytime.
Yeah, anytime. Happy to help.
All right, thanks. Bye-bye.